So I think December is still on the table, and for the following reason. The economy will benefit from lower commodity prices, particularly oil, and the economy will benefit from lower interest rates. And that's going to fuel some underlying strength that the economy does have. The big question is, how much damage are we doing to the wealth effect, and to what extent will external demand collapse? We cannot answer that question yet. So I would think December is still a possibility, but September is unlikely to happen.
Wow, it's interesting, you know, Alix. Ellen Zentner over at Morgan Stanley, she brought forward her rate hike call. I wonder if she's regretting that now. Mohamed, you said earlier this morning that the sell-off, which, by the way, is picking up momentum throughout this interview, the Dow is back down, I believe, about 600 points right now, that the sell-off will turn around once there is a policy circuit breaker put in place. What would that look like? What would government intervention have to look like to stabilize markets?
So it's very important to understand that without an external anchor, this market will continue to sell off. And what you've seen today on very heavy volume and this amazing, almost 1,000-point range in fluctuation, is that there are still quite a few people stuck in overextended positions, and the buyers don't have that much conviction. And that's why we're selling off again towards the end of the session. So we need that external anchor. Otherwise, prices will have to go down a lot more to bring in buyers with conviction. What can that be? Unfortunately, it's not the Fed, it's not the ECB. This one is different. The source of this dislocation is from the emerging world, and therefore what you need is something that stabilizes the emerging market over there, and that means China. So you need something credible out of China for that to act as your stabilizer.